as always, with the market action, no end to the mayhem that we've been seeing in global markets. Today, the bears on Dalal Street were in total control. Markets have moved to levels not seen before the Modi government took charge. Both major indices touched their 52-week low in intraday trade. Sensex lost over 266 points to end at its lowest level in the last 20 months. In fact, a whopping 548 stocks hit the 20% lowest circuit at the Bombay Stock Exchange. The Nifty, that has broken below 7,400, losing over 86 points today, going home at 73.51. These are levels we've not seen since May of 2014. Mid-caps got whacked out of shape. That index lost over 3% and a whopping going back down by about 400 points in trade. Anuj Singhal joining us to wrap up today's trading action. Anuj, a bloody Monday, bears in total control.
Well, this is a market in which the bears have been in total control and they just don't want to relent. These bulls are not even getting a bit of a space in this market. That's the kind of market that we have right now. What happened today? The Nifty is now down 19% from peak, so within 0.5% of the technical definition of bear market. The Bank Nifty is already there, 28% from the peak. In fact, this year alone, the Bank Nifty is down 11%, the Nifty is down 7%, but the last fortnight has been really brutal for the mid-caps and small caps. We have the mid-cap index down 10%, the small-cap index down 15%. It fell 4% on Friday, it fell 4% in today's trade. Advanced decline ratio of almost 1:10, 570 stocks hitting the lower circuit on the BSE. And what was disturbing for a lot of people today was that the leadership stocks have also started to correct. Today, what broke the markets back was Reliance. That stock was down about 5% after leading the bulls charge for last many days, or at least trying to make sure that the market didn't break significant support marks. We had new lows for L&T, ICICI, State Bank of India, and big correction in high pedigree mid caps. Jet Airways, for example, down 11%, India Cements 9%, Bajaj Finance down about 8%, and cash market volumes were also high. So the big question is, what's ailing this market? There's not one single factor, there's a combination of factors. The biggest one is what's happening globally. The global markets are at the risk of a bear market. That's something that's playing out for the last 2 weeks or so. Point number two, the FIS sell number. We've only seen an increase in the pace of FIS selling, at least the net number. That's a big worry. The retail and HNI sentiment has taken a big hit, and that's also something that's playing out. The mid caps had entered exuberance zone, and that's getting corrected in trade over the last few days. And for all you know, that may continue for some more time. Clear evidence of margin selling, squeeze, whatever you may want to call it, in the mid caps. And finally, no sign of earnings recovery. That's the most important factor for markets to move. That hasn't happened. As of now, there's no reason to believe that this market should turn just because it's oversold. We've seen oversold markets remain oversold for a really long time. This is a market in which bears are in control and they don't want to give anything to the bulls right now.
Bears in total control. Thanks, Anuj, for joining us with that analysis. Now,